The US dollar has been the dominant currency for almost a century. It is the most widely used currency in international transactions and is the world's primary reserve currency. The dollar's purchasing power has changed over the years, and its value has fluctuated against other currencies. The dollar was created in 1792, and its value was tied to gold. The U.S. government set the price of gold at $20.67 per ounce, and the dollar was backed by gold reserves held by the U.S. Treasury. This system of tying the dollar to gold, known as the gold standard, was in place until 1971. During the gold standard era, the dollar's purchasing power was relatively stable. The U.S. government maintained a fixed exchange rate with other countries, which meant that the value of the dollar remained constant against other currencies. This stability made the dollar an attractive currency for international transactions and investments. However, the gold standard was abandoned in 1971 due to the rising costs of the Vietnam War and the increasing U.S. trade deficit. President Nixon ended the convertibility of the dollar into gold, which meant that the dollar was no longer backed by gold reserves. This move led to the creation of a fiat currency system, where the value of the dollar was determined by market forces. Since the end of the gold standard, the dollar's purchasing power has fluctuated. The value of the dollar is affected by various factors, including inflation, interest rates, and geopolitical events. Inflation, in particular, has a significant impact on the dollar's purchasing power. Inflation erodes the value of the dollar over time, which means that it takes more dollars to purchase the same goods and services. Inflation is caused by an increase in the money supply, which can be caused by factors such as government spending, low interest rates, and quantitative easing. When there is too much money in circulation, the value of the dollar decreases, which leads to higher prices. Interest rates also affect the dollar's purchasing power. Higher interest rates make the dollar more attractive to investors, which can increase demand for the currency and push up its value. Conversely, low interest rates make the dollar less attractive, which can decrease its value. If the U.S. is involved in a conflict or there is uncertainty about the country's economic policies, investors may choose to sell the dollar, which can decrease its value. Despite fluctuations in the dollar's purchasing power, it remains the most widely used currency in international transactions and enables U.S. to export inflation. The dollar's dominance is due to several factors, including the size and strength of the U.S. economy, the stability of the U.S. political system, and the liquidity of the dollar. These factors make the dollar an attractive currency for international trade and investment. In 1934, U.S. President Franklin Delano Roosevelt signed the Gold Reserve Act of 1934, which revalued the price of gold higher by 75% to $35 per ounce. In 1971, President Richard Nixon ended the gold standard. Between 1968 and 1971, the market price of gold rose from $35 per ounce to over $41 per ounce. Between 1971 and January 1980, the price of gold ran from $35 to as high as $850. The dollar's purchasing power has changed significantly since its creation in 1792 from $20.67 to $1,825.23 to today. The significant loss of value of money over the long term in America between 1792 to 2023. $1 in 1792 is now worth less than 2 cents. The U.S. government initially tied the dollar to gold, which provided stability to the currency. However, the gold standard was abandoned in 1971, which led to a fiat currency system where the value of the dollar is determined by market forces. Inflation, interest rates, and geopolitical events all affect the dollar's value, and its purchasing power has fluctuated over time. Despite these fluctuations, the dollar remains the dominant currency in international transactions. Between 1971 and 2022, the average home price in the U.S. increased nearly 14-fold from $25,200 to $348,000. However, the price of gold increased over 51-fold. In fact, in terms of the purchasing power to buy a home, the price of gold outperformed as an inflation hedge. In 1971, it took 720 ounces of gold to buy an average home. But in 2022, it takes just 193 ounces of gold to buy the average home. So, the increase in the price of gold from $35 in 1971 to $1,825 in 2023 can be attributed to the resulting increase in money supply and inflation, as well as increased demand for gold as a store of value. A store of value asset is a type of investment that is typically used to maintain purchasing power over time. It is an asset that holds value over a longer period, often with a stable price or minimal price fluctuation. Some examples of store of value assets include gold, silver, real estate, and stocks of companies with a long-term history of profitability. These assets are typically sought after by investors who are looking to protect their wealth from inflation or currency devaluation. In recent years, another asset that has gained attention as a store of value and safe haven asset is Bitcoin. Bitcoin is a decentralized digital currency that was created in 2009. While Bitcoin has been known for its volatility, it has also been viewed as a store of value asset due to its limited supply. Unlike fiat currencies that can be printed endlessly, Bitcoin has a fixed supply of 21 million coins. This limited supply has been viewed as a feature that could potentially help Bitcoin retain its value over time. While traditional assets like gold, real estate, and government bonds have long been viewed as store of value and safe haven assets, Bitcoin has emerged as a potential alternative in recent years. However, investors should carefully evaluate the risks and benefits of investing in Bitcoin before considering it as a store of value or safe haven asset. This is for educational purposes only and should not be taken as financial advice. The information provided is not intended to be a substitute for professional financial advice. Please consult a financial professional before making any financial decisions. Please comment, like, and subscribe.